Hello and welcome to the Future of Loyalty podcast with me, your host, Tom Peace. The Future of Loyalty are a series of informative and engaging podcasts with a laser focus on the emerging trends within the customer loyalty, engagement, and CRM sector. I invite industry leaders and subject matter experts to discuss the future developments in customer strategy, and all our discussions are focused on where the industry is going next. Our discussions are fueled by a passion for new developments and innovations in the sector, and we aim for about 20 minutes, perfect for your coffee break, your lunchtime, or your journey home. If you enjoy this podcast, please subscribe at www.theloyaltypeople.global to get all our content direct to your inbox. Hello and welcome to the latest episode of the Future of Loyalty podcast. Today I'm joined by Jas Shah, and we are going to be talking about all things futuristic in the world of retail banking. Jas, please could you introduce yourself?
Hi, Tom. Yeah, thanks for having me. My name's Jas Shah. I'm a fintech product consultant, which basically means I work for lots of different fintechs and banks and insurers and help them shape new products, help them improve their existing products, and basically do a load of work on the product strategy, product development, and kind of fintech insights space.
Excellent. And if you don't mind revealing how old you are, how long have you spent working in the retail banking sector?
16 years.
Oh, wow.
Yeah, 16 years, including some retail banking work. But
So
that,
you must have started at the age of 7.
no, I'm just trying to think, 21. So I started in 2007, yeah, 2007, just before the dreaded 2008
Yeah,
crisis,
good time.
at which point I decided to join an asset management company, and then an investment bank, and then another asset management company, and then retail banks, open banking, fintechs. The list goes on. But yeah, not a great time to join financial services,
Well, yeah, you
in some
say
respect.
that. You say that. I started my career at Kodak, just at the point when digital cameras kind of killed off photography, like traditional photography. So it's an interesting time to start a career, isn't it? You're basically working through a business case. So yeah, I'm
Yeah.
sure you learned a lot. Although it might have been hard work, it might have been quite stressful. I think you probably learned a lot going through that.
Yeah, and I think that has kind of shaped, without jumping straight into the discussion we're probably about to have, that's kind of shaped lots of the digital banking propositions we see today. PSD1, which is a regulation that came out of Europe, was designed to increase competition, reduce that like too big to fail central banking structure, and create more competition and spread deposits out essentially and create better banking propositions. So I think if it wasn't for 2008, I think maybe PSD1 wouldn't have come as soon after as it did. So
Oh, really?
yeah, like you said, it's maybe a bad time to join in some respects, but also kind of the start of that upward innovation cycle.
Yeah, absolutely. Yeah, maybe it sort of kick-started some innovation in the retail banking sector that perhaps would not have happened otherwise. I mean, I suppose it was about that time that the kind of the neobanks really started to emerge, which I think also has elevated the performance of some of the other traditional banks. So, and that cannot be a bad thing, right? But I think, traditional banks still need to move faster. But it's great to see some of the neobanks doing such great things. I know Monzo and Revolut are toying with all sorts of different loyalty mechanics, which is fantastic to see. And I'm a big advocate of this sector. I worked for a company called Reward Insight, who provided the card-linked offer strategy for Amex and Royal Bank of Scotland in Europe. And that business has gone from strength to strength since I left. Hopefully not because I left, but you never know. And has started to emerge into different geographies as well. So that's something that's I find quite fascinating. And I also worked for Collinson, who at the time that I was there, we were really revolutionising some of the loyalty solutions for retail banking across Europe. And it triggered something in me to think that actually the banks are so well placed to generate loyalty, not just for the member, but also across the different merchants in their group. They've got so much data and it's so granular. They know everything you buy, they know your shopping habits, they know your life stage, your age, where you live, how much you earn, if you earn, maybe you're retired. Maybe you're just had a baby. They know all these things, so they have all this very granular data, and with a few notable exceptions, I don't feel that retail banking has really grasped the nettle of what this opportunity could be for them. So yeah, discuss your thoughts on that little intro.
Yeah, I agree. I think there are a multitude of reasons why. And like you said, challengers, they were called challengers back in 2015 and 16, and now neobanks moved the needle quite
Mm,
a lot. And that was down to PSD1 because PSD1 basically made it easier for
mm,
the non-inner circle, like not the outside of CMA9 to get a banking license. And then we kind of rode the upward wave of banking as a service providers that made it easier to build a core banking platform, uh, connect to bin sponsors and actually create a full-blown proposition along with the license changes. But I think it takes a while for banks to change and move. And the old analogy is that a bank is like a massive oil tanker and a neobank is like a speedboat.
mm.
If you tell both to change direction at the same time, the speedboat will be almost instantaneous. The tanker, it has to plot a course. It can't just flip straight away because it's got quite a wide turning circle. So it has to really put things in place to make sure it can make that change. And even when it does make that change, it almost seems like they're not moving, but they are.
Yeah,
And I think that's one of the things that they've kind of been victim of. Um, and the other thing is, I always say this: a bank is not one single entity. Pretty much every single bank on the high street is made up of at least 10 different component parts, like 10 different companies that they've acquired over the course of, and again, we're talking hundreds of years mostly.
yeah,
Lloyd's, Barclays, Santander, they're really old institutes. And it means that their tech stack is not just
yeah,
not one nice clean monolith that you could split out into different parts and put a nice little data layer on top and have a single point of contact with merchants. It's your credit card program is run on a different bit of a tech stack. Your current account program is run on a separate component parts. And they're all separate. And we're only now seeing uh, front end digital apps connect those different component parts together and make it seem seamless to the customer. But in the back end, they're all still quite separate. So although you might have your mortgages and your current account balance and your savings balance in one app, odds are they're still not connecting to the same, you know, single group of data sets. They're probably connected to completely different parts of the business. So it's a challenge basically to try and homogenize that and create a single rewards program for a customer across products. It's quite tough.
yeah. I get that. I get that, but I still do think they need to continue to innovate, and if they can find a way to speed up, I think some of these neobanks, especially Revolut. I mean, they're just carving their way into the traditional retail banking landscape. And from a consumer point of view, long may it continue. But we'll see. We'll see how the traditional banks fare. They're still enormous in terms of the size of them versus the neobanks. So I'm sure they'll be fine. But tell me, what do you think is next for retail banking? How are they going to start to revolutionize the customer engagement in terms of driving kind of loyalty and engagement and securing that customer for the future?
I think to use your example, neobanks have moved the needle, and then retail banks have, or let's say high street traditional banks have followed suit. And I think that's exactly what will happen with the future of loyalty. I think neobanks and challenger banks are going to start to do more in the space, and they already are. Um, Monzo's got a little package deal thing where they bundle up different services and offers into their different tiers, into the
Yeah.
different subscription tiers, and they've built those packages off data that they've gathered over the past few years. So the Greg's perk and the Costa Coffee perk, those aren't, kind of plucked out of the air. They've been built off analysis they've done on their customers over the past few years, and they're kind of tailored to a degree, but tailored to the mass customer base. And I think, I recently saw Lloyd's do a kind of similar thing. I think it's called
Yeah.
Club Lloyd's.
Yeah.
And it's a similar thing, but it doesn't have the same feel, but it seems like it has the same outcome for customers that, you get, I think it's a couple of free cinema tickets every month. I think it's something like, I think there's an insurance bundle as part of that, travel insurance
Yeah, there
bundle.
is.
And there's a coffee perk. So it feels quite samey compared to what Monzo have, and I think what Starling are looking to introduce as well. But I think that the future will mostly be decided by what the neobanks do, and then larger retail banks will start to follow suit. And I
Yeah.
think they're starting by tailoring those packages and going, yeah, look, if you want a current account, why don't you take a current account, savings account, and take this subscription tier, and we'll give you personalized offers that will essentially net off your spending for those different perks.
Yeah, that's interesting. I think you mentioned in there about the data, and for me, that's really where I think retail banking should go next. And I mentioned it kind of in the intro, but I think that the retail banks have got this wealth of data. They know a lot about you. They know who you are and how much you earn and where you live and what your debt situation and your savings situation is, etc. So they know a lot about your financial health. They also know what you buy, and they can infer from that what your hobbies are, etc. One of the banks that I worked with a few years ago was Raiffeisen Bank in Europe, and they were implementing loyalty, which would talk to you about, it was helpful banking, which is not necessarily new. We've got lots of banks that talk about helpful banking, but they were saying things like, well, we'll track your spending, we'll give you alerts to say, oh, actually, you are. If you spend at this velocity for the rest of the month, you're going to go into your overdraft. You need to slow down a bit. So it's helping you with that. They would also look for triggers that might say, oh, you've just bought a house or you've just retired, you might need some advice on loans or some advice on investments and that sort of thing. But they were also working with their merchant partners to create really engaging models that would which would target consumers at specific times. So it was all real time offers, and it was also geolocated. So they could say, right, we know that this person has been in the mall for 2 hours. Let's offer them a free coffee. And that free coffee would be, to your example, would be provided by Greg's or Costa or whoever. Um, and that merchant offer would be funded by the merchant as an acquisition offer, but the bank would support that kind of real time and relevancy, and also the geolocation. We know they're in a mall. We know they've been there for 2 hours by the purchases they've made. Let's offer them something like that. And actually, I thought that was quite revolutionary at the time. We're not going back 100 years, just a few years. A few years ago, this was, and that I think is where banks need to think about, how do we engage both the merchant acquirer network, all our merchant partners, and also the consumers within our bank, and talk to them in a very highly relevant and personalized way based on who they are, what they're doing, what they need, and also their hobbies and that sort of thing. And do you think that's a play for retail banks in the future?
Yes, yeah, I think it is. Again, I think not challenges necessarily, but I think someone who is looking to make a big difference in that space is is PayPal. I think
Mm.
that they've, I think over the past few years, they've had a bit of I'm not going to say rough time, but their growth hasn't been what it is expected of them. And so they've released a bunch of new features at the start of this year, and I've just written about them quite recently, so I'll maybe put the link in this pod. But yeah, they've released a load of features that, unsurprisingly, are most of which are AI powered, and I think that's the technology pivot for banks. I think previously, to do what you're describing for 60 million customers is quite tough, because what you're trying to do is, you'll start out analyzing data and trends, and then you'll create an ideal customer profile that would fit certain offers and deals. And I think, and this is why I think in this space, neobanks have led the way a little bit, is it's easier to do that on 1 million customers than it is to do it on 60 million customers, and then allow the customer base to grow. I think when you've got data that's kind of disparate and really decoupled, you almost need a data transformation program, of which there are many, uh, to pull all the data together and to really make sense of it. And I think that's been the challenge for banks. They brought you in to be part of that program, and there are multiple simultaneous programs going on
Yeah.
now at various banks to do the same thing. So I think that they're trying to get there, and I think it does take time. You need a data architect to come in and look at the whole stack and go, to build this loyalty program, we need all of these data points, and then it's almost a year project to just find them, normalize them, have some data standards before you could create those ICPs, and then connect those ideal customer profiles to those offers, and like personalized either cashback offers or specific free drinks or discounts off programs. And I also think that it's easier to do that with bigger merchants. So with a Greg's and a Costa and Walmart, McDonald's, KFC, it's easier to do that because you could go build those partnerships with the big, with the heads of with the partnerships teams, and then it trickles down. And
Yeah.
obviously you've got distribution network, and you've got like a voucher mechanism or something. I think the difficulty comes when you're trying not to isolate SMEs and smaller merchants from those programs, and that's why I think the banks, the retail banks that will really win on this side will be the ones who create the programs and also create mechanisms via their front end digital apps, and whether it's a tokenized card, and via tools that they give to those smaller merchants to actually make sense of spending analytics. So I don't know, let's say you've got a small coffee shop down your high street that wants to create a rewards program. They don't want to necessarily do a stamp like 8 stamps on a piece of paper, but they want it to be spending based. Lloyd's Bank giving that SME a tool as part of their accounting package that could also analyze spend and go, look, we know that X, this person spends 15 times every couple of weeks. Just push a cashback offer or push a free coffee offer directly through the app. Smaller merchants aren't going to spend the time and effort to build these tech platforms out themselves. But if Lloyd's offer it out the box, for example, Lloyd's or HSBC or Santander or whoever else offer this as part of their accounting and business solutions package, it could be something that is easy out the box. As soon as a Lloyd spend happens through the platform, touches a POS system, goes into their accounting package, and connects to their rewards tool, it could just be applied directly onto the transaction, and not this big faff of printing out coupon codes and having to manage the rewards program almost outside of transactions, which is cumbersome, resource intensive, and it's not coupled to the experience of the customer, and it's a faff for the customer as well. So I think that the big banks who start to do that will win in the space. And the reason I bought PayPal is it looks like that is what they are trying to do. So for e-commerce sites and for in-person SMEs, like physical payments, where they use Zettle as their POS, PayPal are giving or building this rewards advanced offers platform out, and then giving it to SMEs and going, you can, as long as your customer pays through the PayPal wallet, we could apply cashback offers directly to the wallet, as long as they select, they'll select the offer in the app at the start of the week, similar to the American Express feed. Select the cashback offers, which are obviously personalized, and then as soon as they go spend, they don't have to do anything different to the journey. As soon as they go spend, cashback offer is applied. They can either have that money, reimbursed onto their digital wallet balance. They can sweep that cash back into a savings account. They could double stack using, they've got a MasterCard cashback debit card. They could double stack a cashback reward on top of their existing PayPal card. They're really doing something in the space, which is really interesting. And I think banks will start to copy that and go, well, why, we've got 1 million SMEs, 30% of them are consumer facing retail outlets. Why don't we do the same thing? No brainer.
Yeah, that's really interesting. That is kind of a pinch point, isn't it? And the costs of that kind of settlement and the whole merchant acquiring chain are significant costs, especially for small business. So if there is a solution that either reduces that cost or enables the SMEs to drive growth from that channel, that's got to be very welcome for those retailers or those merchants rather. Or not just the SMEs actually, but I'm sure some of the bigger guys would also appreciate that technology. And that's an emerging solution, is it? Is that kind of linked to open banking, or is that really driven by the players in the market like PayPal?
It's driven by the players in the market. Yeah, it's not really open banking related at the moment, I think.
No, it's funny, isn't it? The open banking sort of 5-6 years ago, that was big news, but haven't really seen. And you see the stats that sort of says, most of Europe have got 95% plus coverage on this now, but it just doesn't seem to have come through as a solution for consumers just yet.
Yeah, and coverage doesn't translate one-to-one to usage, right? So you can have
No.
95% coverage, but 95% of current account users don't have to use the service. Most people in the UK don't really know what open banking is. To a degree, they don't need to, but I think that's kind of been maybe one of the lessons learned from the launch back in 2018, that like the likes of Pix and the likes of UPI in India have understood and have kind of addressed on their side. They've gone, look, this is how UPI works. It's basically open banking in India. This is how UPI works. If you use UPI at these merchants, you'll get a discount off the transaction, because it costs us less to take a payment via open banking than it does via an acquiring terminal and using a payment processor and using a card, like paying interchange fees. So I think there's been a degree of kind of missing the trick for payments specifically, and I think broadly the biggest beneficiaries of open banking have mostly been SMEs and have mostly been SME finance related. So open banking has kind of driven the digital onboarding and digital assessments of SME lending agreements. I've worked for a lender for 2 years and headed up that team, worked on lots of projects, including using open banking as part of their offering, and it speeds up the onboarding, it speeds up the assessment, it speeds up the risk tiering process. So really, it should be a big consumer benefit, but SMEs have probably seen the most out of it. But I think it is starting to change. I've been at some stores where they've literally stacked up their kind of percent fees based on card type, based on payment method. American Express is usually right at the top. Here's, if you pay by American Express, here's how much it's going to cost us. If you pay by open banking, here's how much it's going to cost us. If you pay using a P2B open banking payments solution, we'll give you a discount off coffee. And I think that's how consumer adoption will happen. And even through the app, like through apps, Venmo in the States, they have a similar sort of thing where, like, I was on a bus a few weeks ago, and the driver was like, tip me in cash or tip me in Venmo. Those were the two preferred payment options, because obviously cash is cash.
Yeah.
But Venmo is the next most viable option for things like tips, for things like, peer-to-peer payments.
Yeah.
And I think we'll get there. I think it's just it's a longer road than it probably needed to be. And I think part of that is maybe consumer education from the very beginning.
Yeah, absolutely. Well, I think the peer-to-peer, I wonder if the QR code might be making a comeback. I think it actually, the QR code really, I think, made its comeback through COVID, when we're all scanning menus on the table and all that sort of thing that we learned how to do. And now QR codes seem to have become a lot more mainstream. I felt like it was a really good idea that was dying out until you couldn't touch anything because of COVID, and then it came back. But actually, I know that in certain areas of the world, QR code based payments are much bigger than they are perhaps in some of the other parts of the world. I went to a market in Denmark. I was in Denmark a few years ago, and all the stalls had QR codes on there, just printed out on a laminated piece of cardboard, and that's how you action payment. There wasn't, I think you could pay by cash, but most people were paying in a market, on market stalls, using a QR code which activated the payment to that particular merchant. And we don't necessarily see that in the UK, and I've not really seen it too many other places around Europe. But I think maybe there is a lot more innovation to come in terms of that payment solution.
Yeah, it's, again, in India, it's huge.
Yeah,
You can't go anywhere without seeing a QR code, to be
yeah,
honest. I was there in April, India and Sri Lanka, both are the same. So even three-wheelers, tuk-tuks, take QR code payments
yeah,
via UPI. In Brazil, it's big again because of Pix, and it's almost like the journey through open banking payments is a bit easier through QR code. But I think that there is a way now that Apple are having to open up NFC on devices. There is a world in which we have open banking payments through NFC, which is probably